Hey guys, welcome back to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Check out my other videos, and if you like what I'm doing, please give a thumbs up. It really helps out the channel. It pushes the YouTube algorithm to suggest my video to other people and helps spread the word. Also, if you haven't yet already, consider subscribing and you'll get updates about all my new videos. All right, so today what we're going to do is basically give you an update on my public portfolio that I share with all you guys. I think it was more than 2 weeks since the last time I did a video about my portfolio and my positions. I think last time my portfolio was down in the 20%. I think it was like 20 some percent in the negatives. What a big change the last few weeks have been. The stock market has been rallying, going up just insane amount in the last few weeks. I think it's been up at least 10 to 15% in the past week. The best week the Dow and the S&P had in decades. So currently my public portfolio that I share with you guys, it is down 11.52%. And so we're going to go over each one of my positions, and I'm going to just kind of give a brief overview of each position and what that position is doing and what I think about that position. All right, so let's get started. We're going to start with the biggest loss first. So currently my biggest loss right now is in Planet 13 Holdings. This was just a speculative play. I only have 10 shares of this stock at $19.40, cost basis of $194. Basically, Planet 13 Holdings, they are an entertainment complex. They have restaurants and merchandise in their stores. They are based in Las Vegas, and I think they're planning to open a store in Los Angeles. But this illness 19 situation has probably kind of derailed that. So I'll put up on the screen right now basically what they are all about that I probably can't say out loud, but you'll see on the screen what they are about. And so that is what they are about. And it's just a small fraction of my portfolio, only 10 shares of that. Next biggest loss is CCL, Carnival Cruise Lines. This stock has actually been rallying. It was down to like $8 a share just a couple of weeks ago. Now it's bumped up to $12 a share. I did another video previously about this stock, CCL, about why it has been jumping up. And if you haven't saw that video, please check out the description below. I'll put a link to it. Basically, I discuss what CCL is doing and why it is popping right now. So this was like down to 60% loss previously. Now it is down to 46% loss. I was able to bring my cost basis down to $23.16, and I'm very happy with that cost basis. I don't plan to put more into this, and I don't plan to sell at all at these prices. I'm looking for this stock to go at least back up to 23, maybe 25 dollars within the next year, a year and a half. Next one is Skyworks Solutions. So Skyworks Solution is a 3G play. I also made a video about Skyworks. I'll put all these videos in the description below. Basically, they are a semiconductor company. They make a lot of chips for Apple, for Samsung, for all the big players. Their chips are in basically all major electronic companies. They do a lot of 5G stuff that they're going to roll out hopefully by the end of this year, if not next year, being delayed due to the illness 19 situation. So also they are doing a lot of stuff with automotive companies. Basically, I made a video about this. 5G is going to come to all cars sold in the future in the next maybe 3 to 5 years or even shorter. Basically, all these smart cars are going to have their own internet connection. Their smart cars are going to communicate back to the corporation, back to the company about any diagnostics. And with the future of self-driving, these smart cars are going to be communicating with other cars. So basically, they don't have to physically see another car coming. They're going to be in communication with other cars, so they will know when another car is coming. So that is basically the future of driving as I see it. Smart cars are going to be driving themselves, and they're going to need to communicate with other vehicles and communicate their data with the corporation, the company that they came from. And so in order for this to happen, high-speed internet is needed on the mobile platform, and basically 4G is not going to cut it. 5G is going to be at least 10 times faster than our current 4G speeds. So that is the deal with Skyworks. That is what they are doing, and that is why I'm so interested in them. If you see my other videos, you know I am big into self-driving cars. I believe that is the future. It's going to come in the next 3 to 7 years. So that's why I'm very interested in Skyworks and what they're doing. Next one is Uber. So everybody knows what Uber is. I am down 10% on Uber, cost basis of $30. I am interested in buying more Uber if the price goes down into the low 20s again. Right now it's trading at $27. I mean, it got all the way down to like $15 Uber stock back in March. So if it gets back down into the low 20s, I definitely am interested in picking up more Uber shares to bring down my cost basis. And basically, I'm interested in Uber because I see that they're going to be a profitable company either at the end of this year or possibly next year due to the illness 19. Obviously, their Uber platform is taking a hit, with the whole market being closed, with all the shutdown happening. But there's a caveat, their Uber Eats is seeing nice revenue numbers. A lot of people are ordering food for delivery. So their Uber Eats is kind of like their savior. So their numbers are probably not going to be as bad as everyone thinks. But what they're really doing is they're focusing on being profitable. So basically they pulled out of any market that they were not either number one or number two player. So in other countries, they pulled out of markets and by pulling out of the market, they allowed the number one player to have a bigger market share. And in return, Uber was able to get equity in those companies. So awesome move from their CEO and their management team. It's all about profitability. Now with these rideshare companies, whoever's going to be more profitable, whoever's going to get the profitability first is going to survive. So Uber already has the market share. So they are not interested in growing their market share as of now. They're interested in getting profitable. And that's why I'm so interested in Uber. Next up is STM. So STM is also a semiconductor company. They make microchips for a lot of the big players. And they are also in the 5G space. So I am down 10% or 10.37% on STM. Cost basis of $25.64. I believe I did lower my cost basis a few weeks ago on STM, bringing my cost basis to $25.64. I believe I picked up like 20 shares to bring down my cost basis. Next one is Revolve, Revolve Group, RVLV. So basically they are a mid to high-end women's fashion company. They do all their marketing online with social influencers on Instagram, YouTube, and Facebook. So they are a fashion company. They have a good balance sheet. They are doing good sales. Obviously, with the illness 19 situation, their sales are going to take a hit. But I believe after this, they're going to recover just fine. So I have a cost basis of $11.30 per share on this. Next one is Starbucks. I just purchased one share of Starbucks just because I had some extra money laying around on this account at the time. And it was just enough to purchase Starbucks at $69. They have jumped up to $73 since. So basically with the whole illness 19 situation, their stock has taken a hit. And it is what it is. I've just picked up one share because that's how much money I had at the time. Next one is Tesla. Tesla, I am at $5.15 cost basis on this. I've been picking up shares on Tesla on all of my accounts, across all my accounts, when the stock was dipping down into the 400s and into the 300s. So on this particular account, I have 4.812 shares at a cost basis of $5.15. And so I am up 11% on this. Tesla is definitely a stock that I am looking to pick up more. If it ever dips down into the 400s or 300s again, I will be loading up on Tesla. They reported their Q1 numbers and they beat expectations, but probably their Q2 numbers are not going to be that great because basically they are shut down currently and they've been shut down for, I think it's been 2 or 3 weeks now. So their Q2 numbers will probably be a little bit weak. But who knows, because their Shanghai factory is back up and running, and so they are probably going to make good numbers over there, and that may counterbalance their bad numbers here. So who knows what's going to happen, but I kind of do believe that they are going to report a bad Q2, and hopefully their stock price does take a dip, and I'll be picking up shares if it does. Next one is 3M, Triple M. So I have 7 shares of Triple M at a cost basis of $125.57. Currently up 17.6% on this. Basically, I picked up 3M when this whole illness 19 situation happened. I knew that we are going to be needing a lot more masks due to this illness 19 situation. And 3M stock was down to, I believe it was like 130s and then 120s. And I think it even dipped down to probably the lower 100s, 110s. and I was picking up shares of this as much as I can across all my accounts. So I'm pretty happy with this position at 125.57 per share. If it dips down to the lower 130s again, I probably will be picking up more shares of 3M. And the last one, the biggest gainer of them all at 22.97% is e.l.f. e.l.f. Cosmetics. They are a cosmetic company. They make good cosmetic products at a pretty low price. I have their shares at $8.75 a share is my cost basis. I have 20 shares. Right now they are trading for $10.76. So that is up 22.97% for me on e.l.f. So that is it. That is the rundown of all my stocks on this public portfolio that I share with you guys. So again, I am down 11.52% on this portfolio that I share with you guys, my public portfolio. And I think that's pretty awesome considering the whole stock market issue going on right now. I am actually hoping that these stocks do go down and not go back up because I want to buy some more at the lower prices. So I am waiting for these numbers, these Q1 and Q2 numbers to come out and across the board on all these companies. And I think Q1 and Q2 numbers that are going to come out for a lot of these companies are going to be pretty bad. They're probably going to be a little worse than everybody expects. Combine that with the decline of GDP, combine that with unemployment numbers, I think we're going to head into at least 6 to 12 month recession, and that will cause these stocks to pull back as soon as a lot of investors look at the physical numbers about what's going on. And I think a lot of these stocks will pull back, and that is what I'm hoping for, and that is when I will be picking up additional shares of all my favorite companies. All right, that is my rundown. Thank you for watching. If you like what I'm doing, please give a thumbs up. Really helps out the channel. Consider subscribing, and I'll catch you in the next one. Peace.